Hey everyone, welcome back to the channel. In today's video, I'm doing something special. I'm reviewing my portfolio at age 29. I will break down what I own, why I own it, and the lessons I've learned so far. If you are curious about how a 29-year-old is building wealth through options, stocks, dividend, or cash, you will want to stick around. Let's dive in. I'm sharing on this topic but not to flex, but to educate and inspire. When I started investing, I learned so much by watching others share their journey. This is my way of giving back, showing the real numbers, the win, and yes, even the mistakes. I hope this video can help you create your own path to financial freedom. Here is how my portfolio looked at the age of 29 with actual numbers. 70% in individual stocks, 15% in my option monthly portfolio, 5% in option spread portfolio, 5% in dividend stocks, 5% in cash and emergency funds. Now let's dive into the largest part of my portfolio, which is 70% of it, roughly 560k in individual stocks. This is truly the core of my investing strategy. I focus on high conviction growth company, mainly in sector over technology, artificial intelligence, and innovative areas that I believe that will shape the future in the next 5 to 10 years. Some of my biggest positions will include Nvidia, Google, AMD, Adobe, and Tesla. Currently, Nvidia is in my top holding. I believe AI is going to transform everything. And Nvidia GPUs and data center technologies are at the heart of that revolution. To AI training, Nvidia powers it all, and I want to be part of that growth. My second holding will be Tesla. I know Tesla can be incredibly volatile, but I'm focused on the long-term vision like electric cars, automation driving, and energy storage. I see Tesla as a company that not just making cars, but reshaping industrial. Third will be Google, giving me stability. Their dominance in search, YouTube, cloud, and they are investing heavily in AI. I see Google as a cash generating machine with incredible long-term potential. Number 4, AMD. AMD give me exposure to the blooming semiconductor sector. They are innovating fast along with Intel and Nvidia and benefiting from demand across data center, gaming, and AI. And Adobe is a quiet compounder. They own the creative software space and they have the pricing power as the creator economy grow. But here is where my portfolio get interesting. I don't just hold these stocks and hope they go up. I actively trade options on top of it. I sell cash secure put every single week to earn premium, essentially getting paid to wait for good entries. And when I own the stocks, I sell covered call to earn more premium income. This is what people call the whale strategy. It helps me generate consistent cash flow while holding this growth company for the long term. This means I'm actively managing my portfolio, but for me, it's worth it. It combines growth and potential for steady premium income, and that fits perfectly with my goal of building wealth over the long term. Next, I got about 15% of my portfolio, that's around 120k, in what I call option monthly portfolio. This part of my portfolio give me diversification for steady cash flow and a bit more stable compared to holding individual stocks. So what is the strategy here? I focus on selling puts. Specifically, I look for safer setup. There are trades with high probability of success. For this portfolio, I'm targeting option with a delta of 80%, which means it has an 80% chance of winning on those trades. This portfolio mainly target on index fund like SPY, QQQ, that is more diversified and a safer approach. The idea is to generate consistent income while keeping my risk manageable. This portfolio let me stack small, reliable win over and over again. The beauty of this portion is I'm not worried about the performance of individual companies in this portfolio because I'm not betting on just one stock going up to the moon. Instead, I'm focused on smart, disciplined option selling that can work over the long term. Option trading has always been a big part of how I generate extra income from my portfolio. It is not just by holding stock and hoping they go up. It's about making my portfolio work for me every single month by creating premium income. This part of my portfolio runs quietly in the background, no stress, no consistent monitoring, just steady cash flow added to my account month after month. Next, I'll talk about the 5% for my option spread portfolio, which equivalent to 40k portfolio, but I play it safe. This part is designed to generate monthly income, but with controlled risk. I mainly use credit spread for this portfolio. If you're not familiar, a credit spread is when I sell an option and buy an option with a different strike price that limits both my potential loss and my potential profits. This is a safer way to trade option because I always know what is my maximum risk upfront. But even though this is an option trading, I keep it conservative. I only use spreads on stocks that I actually want to own, so even if the trade doesn't go my way, I'm comfortable with the underlying company. And here is what I want to emphasize. I know that option can be risky, especially with spreads, if you don't manage it properly. That is why I size my portfolio small, just 5% of my total portfolio. The goal isn't to chase big wins, it's to generate steady, predictable monthly income while keeping risk tightly controlled. This option spread portfolio work alongside with my other strategy that give me another layer of income without taking unnecessary risks. Next, I'll be talking about my dividend portfolio. I've set aside 5% of my portfolio, so it's around 40k for dividend stocks. Now, for that part of my portfolio, I keep it really simple. I focus mainly on DBS Bank, which is one of the strongest, most reliable company here in Singapore. Why DBS? Because I want a stable and consistent income. DBS has a solid track record of giving dividends, and right now it offers a yield of about 5% per annum, which means I'm getting a steady flow of passive income no matter what the market is doing. This part of my portfolio is not about growth or huge upside. It's about balance. Having something that quietly generates cash while the rest of my portfolio focus on growth and option trading. I see these dividend stocks as a foundation to help me smooth out the ride, especially during volatile market. Finally, I keep 5% of my portfolio, which is around 40k, in cash and emergency funds. Why? Because cash is important, and honestly, this is what gives me a peace of mind. First is my safety net. If something unexpected happens, whenever it's personal, emergency, or just a sudden expense, I know I'm covered. I won't be forced to sell my investment at a bad time just to raise cash. And second, it gives me flexibility. When the market pull back or I saw a great opportunity, maybe a stock love goes on sales, I have the funds ready to move fast. Even though it's a small part of my portfolio, but it plays a big role in helping me sleep tight at night. Cash is my cushion. It gives me confidence to stay invested for the long term without me worried about short-term volatility. So after building this portfolio, here is what I learned so far on my investing journey. Number one, time in the market beats timing the market. I know it's tempting to wait for the perfect dip or the perfect entry point, but the reality is no one can consistently predict where the market will be tomorrow. What really matters is just getting started. Even if the investment is small, the key thing is to let time do the heavy lifting. Compounding and option trading works best if you give it time. Number two, diversification matters. My portfolio isn't all in one stocks or one strategy. I have a mix of growth stocks, option trading, dividend stocks, and even cash. Balance helps me stay calm even if markets stay rough. When one part of my portfolio dips, another part is usually steady and generating income, so it helps me focus on the bigger picture. Number three, keep your emotion in check. The market will absolutely test your patience. There will be red days, volatility, headline that will make you sell everything or double down. But here's what I learned. Staying calm and stick to your plan is what wealth built over time. Focus on your long-term goals, not the short-term noise. At the end of the day, my portfolio isn't perfect, but it's designed for me, my goals, my risk tolerance, and my timeline. And that is the key, building something that helped me stay invested for the long run. So here is my portfolio at age 29. I really hope this breakdown gives you some ideas or at least inspire you to think about how to build your own portfolio one that fits your goals and your lifestyle. If you enjoy this video, it will mean a lot to me if you smash the like button and subscribe to my channel. It really helps to support the channel, and it tells YouTube to share with more people who are interested to learn about investing. And if you want to see more content like this, including update of my portfolio, option strategy, and lesson that I've learned along the way, make sure to subscribe and turn on the notification bell so that you don't miss anything. I would also love to hear from you. What is your portfolio right now? Are you focusing on growth stocks, dividend, option, or something else? Drop a comment below and let's chat. Thank you so much for watching, and I'll see you in the next one. As always, until next time, trade smart and stay profitable.